Hello, friends. Welcome to another edition of our weekly webinar from Proficient. It is 8th of February, Friday. We just had our weekly closing hour and a half ago, and what a volatile week we had. And firstly, market uh, went up, put up a new breakout above 11,000, and it went as high as 11,100. But towards the closing of the week, it surrendered nearly entire of its gain and closed just a tad higher of its previous week's closing, approximately 0.7 to 8% higher. So we are still in the dilemma whether the breakout has actually occurred or not. And looking at the Nifty chart, we do not see any significant movement. Let me open the chart of Nifty. This is the daily chart of Nifty, and if we turn it to weekly, we will see that there is only less than 0.5% of overall gain week on week basis, and there is a cluster of white and black candles, that is rises and falls since past 2 months. Since November we are seeing this. So in medium term there is absolutely no trend at all, and but market breadth is extremely negative. We will come back to that. Before that, as usual, let us take a close look at the global markets, how the US markets have fared. Then we will take a short look at the commodity packs, and then we will return to our Indian equities. So let us start today's session with S&P 500, which has a symbol of SPX, and let's see the daily chart of S&P 500. So as far as the S&P 500 is concerned, it is taking a resistance at around 200-day moving average, which is at around 2742 region as of yesterday's close. Intermediate trend is high upward. There is no doubt about it. Prices are trading above the 50-day moving average, but below the 200-day moving average. And a decisive breakout above 2750, that will be important. And 2800 is another double bottom or triple top resistance area. So a decisive breakout above 2750 will probably set the tone towards 2800, and after that S&P 500 is likely to challenge its previous all-time high. But these things will come later. For the time being, we are expecting S&P 500 to do some consolidation. It is not a sign of weakness, but short-term consolidation is preferable, because for past nearly 1.5 months, S&P 500 has shown a phenomenal rise. From the last week of December, it has come to from 2350 odd levels, it has come to 2750 odd levels. So there is a phenomenal rise. After that, there is a little bit of consolidation that is of the order, but as far as the technical views are concerned, a decisive breakout above 2750 will set the stage for the bulls to return. Now, let us take a quick look at the US dollar index, how the dollars are doing, because that is important to set the trend in commodity pack. And as far as dollar is concerned, we are seeing some short-term strength in dollar. And it has went past its resistance at 50-day moving average, which is 96, and it has also taken support from its 200-day average. So short-term trend in dollar is likely to go higher, and it will weigh a bit heavily in commodity packs. So we are expecting some short-term weakness in gold and some short-term weakness in silver and crude oil as well. So let us open the chart of crude oil and gold then. So here we go. This is the daily chart of crude oil. Yeah, just like S&P 500, it also created intermediate bottom at 42.5 odd level in the last week of December. Since then, it has shown some rise, but the rise is also losing its momentum at around 55 odd level. Right now, it is trading at $52.5 a barrel region. So, for the past few weeks, we were maintaining our bullish opinion in crude oil, but this week we cannot show as bullishness in crude oil as we were for the past couple of weeks. And we are in fact expecting some pullback in crude oil and in energy packs. But below 51, if 51 is broken, then the chances are very high that the previous downtrend will resume, right? So in the short term, we are expecting some weakness, and that is in order of the strength of dollar. Now let us see how gold has been doing. As far as the yellow metal is concerned, after it has made a new high at around $1330 an ounce level just last week, it is again consolidating, and this is because the dollar is strengthening. So we are also expecting some short-term consolidation or short-term weakness in gold, but the overall trend in overall trend in gold is extremely positive. It is bullish, and we do not expect gold to break the important supports of $1,300 an ounce. In fact, from 1,300 to 1,280, there is very strong support for gold. We are not expecting to break this support. So pullbacks will be buying opportunities for gold, whereas rises will be selling opportunities for crude oil. So these were the views in commodity packs. Now let's see how our equity market is doing. Let us open the chart of Nifty. So yeah, this is the chart of Nifty that we showed in the first of the session. And yeah, there is a pretty strong resistance at around 11,000 region, but this resistance was broken upwards. But on that particular day, it was seeming that the breakout was for real. And although we do not have enough confirmation as yet to see the breakout as false, but there is definitely some doubt after today's pullback. Okay, but we have to say that the primary trend is not down. That is for sure. Primary trend is up because prices are trending above the important moving averages. So definitely it is a buy on pullback market. Today's pullback was heavy in terms of absolute term, because when Nifty falls 125 points, that is obviously some big fall in terms of the value. But overall, it is only a fall of just over 1%, 1.14%, and that too occurred after 1, 2, 3, 4, 5, 6 consecutive days of rise. So this kind of fall was expected, to say the least, and pullbacks will be opportunities to buy. We are expecting prices to go higher and eventually 11,100 being taken out. Maybe that could happen next week, maybe next to next week, but we are not expecting the bottom that was made at 10,600 level to be broken going forward. So overall theme for Nifty is to buy on pullbacks. and mm, a breakout above 11,100 will see further return of the bulls. Now let us see what the stocks are doing and where is the outperformance occurring. Let me tell you before that our market is right now extremely stock specific, right? Uh, Although Nifty made a new high of past 4 months, but that does not mean that all the stocks and all the sectors are participating equally. In fact, market breadth is extremely negative. This pattern we saw back in 2018 when market was overall in a choppy range, in a volatile choppy range, but market breadth was entirely negative, and this is yet again returning. Although markets are rising, but market is rising on very thin volume and very poor market breadth. So uptrending stocks, yes, there are some uptrending stocks, but they are extremely narrow. They are extremely fewer in numbers. Very few stocks are actually showing strength. We will definitely put up the charts. We will definitely show the stocks, but most of the stocks are showing weakness, and most of the stocks are making lower bottoms, and these stocks should be traded from the short side going forward. So let us see how which stocks and which sectors are actually outperforming. Uh, the most important stock that comes to mind as far as strong stocks are concerned, especially for next week, is Reliance Industries. The stock is doing absolutely phenomenal, and after its breakout in the second week of January, the stock has risen nearly 20% in 3 or 4 weeks, and right now it is showing some pullback. So all pullbacks are buying opportunities. The Reliance actually closed at around 1277. Uh, any day it goes past the previous day's high, provided 1250 is not broken, that will be a good buying opportunity in Reliance Industries. Then some private banking stocks like Yes Bank. Yes Bank also has seen a steady decline for past 2 weeks, but the stock is sitting on a very strong support region, and there is a very high probability that Yes Bank will see some 10 to 15% rise from this point. 175 is the closing price. You could keep your stop loss at around the 160 odd level, and 200 or 205 would be the nearest target for Yes Bank. Uh, in the FMCG stocks, Dabur is a good stock to trade from the long side, although after making a new high yesterday, it closed lower today. That is in tandem with the market, but overall trend is upward, and there is myriad of support at around 440 odd level to 435 odd level. Right now prices are at 451, so pullbacks will be buying opportunities as well. So Reliance, some Dabur, and the most important outperforming sector is IT stocks. The IT stocks are actually outperforming by a huge margin, and among these, first comes the likes of Infosys and TCS. Both stocks showed a slight decline today, but over a intermediate term, Infosys and TCS are absolutely brilliant to trade from the long side right now. Pullbacks will be good opportunities to buy. Say, for example, Infosys, the stock closed at around 761 on level, and that too occurred after making a lifetime high at around 770. So pullbacks will be buying opportunities in Infosys. Overall stop loss will be 730. Let us see what TCS is doing. Yeah, after almost 10 rising days, declined. It declined for the first time today. So going forward, we are expecting some pullback to continue. But overall, 2000 to 2020 odd levels will be good to enter long in TCS. And last but not the least is Wipro. That is also a large cap ID stock. And just looking at the chart gives enough strength to trade it from the long side. Last closing is at 372. You have to keep a stop loss at around 365 odd level, and let's see what happens. So if actually these IT stocks are actually related to dollar index, right? If dollar appreciates and our Indian rupee depreciates, then these IT stocks are expected to do well. Another FMCG stocks that catches our attention is Jubal Food, apart from Dabur. And Jubal Food is a very volatile stock, that is for sure. But it made a high at around 1400 and then made a low at around 1200. And that both occurred this week. So you can understand the volatility it showed this week, right? And right now its closing is at 1343 odd levels. So it is at the higher end of its range. And we are expecting the prices to go higher next week. You have to keep a stop loss at around 1300. And overall target will be 1400, right? So these were the stocks to be traded from the long side going forward. Keeping in view the very weak breadth of the market, we are not giving much stocks to trade it from the long side. Whereas for the short side, there is lots of things to do. Many sectors, many stocks are showing extreme weakness, and all these stocks will be in our radar next week to be traded from the short side. Say, for example, the state-owned energy stocks like Hind Petro. These stocks are exceptionally weak, making lower bottoms and lower tops formations. Downtrending lines are clearly visible. And today's closing for Hind Petro is at 230. You have to keep a stop loss at 236. Overall target would be 215 odd level. Say, for example, auto stocks. Among auto stocks, the likes of TVS Motor, the likes of MRF, that is auto ancillary to be specific. Also, Eicher Motors, Tata Motors. These stocks are extremely weak in the long run. These stocks are making lower bottoms and lower tops. So they are in classical downtrend. Maybe some pullback occurring here and there. But after these pullbacks are fading out, we will have to trade this stock from the short side. These stocks, it is not possible for me right now to give the specific level of the stocks because we do not know where the pullback will come, where the pullback will be extended to. But once the pullback is fading out, say for example, prices close after a pullback, after 2 or 3 or 4 days of rise, if prices close below previous days close or stochastic goes to an overbought level above 80, then those scenarios will be extremely interesting to trade these stocks from the short side. Metals are extremely weak. That is for sure. Among metals, there are state-owned metal companies and private metal companies like Tata Steel, Hind Zinc, Jindal Steel. All stocks are extremely weak. Tata Steel is probably trading at its 52-week low. No, not exactly. 52-week low is 440. Right now, it is trading at 468. So there are more leg room below. 440 or 445 odd level is pretty possible for Tata Steel. So is the case of Jindal Steel, Hind Zinc, Hind Copper. All these stocks are extremely weak and can be traded from the short side. And another weak stock, or rather weak sector that catches our attention is PSU banks. I can go on talking at length about the weakness in Union Bank that fell 8% today, about Canara Bank that fell 4% today, about SBI that fell 1% to 0.5% today. But the main theme is that market is overall weak. Maybe the Nifty is rising because of very few number of stocks, mainly led by Reliance and IT groups, IT stocks. But overall, market breadth is extremely poor. most of the sectors and most of the stocks in those sectors, say for example, auto stocks, mid-cap auto stocks, banking stocks, most energy stocks are weak to be traded from the short side. And Nifty, there are some support in Nifty, and we are expecting that support to hold in near term. This week's breakout did not sustain for long, but another assault above 11,100 odd level will set the tone. And we also have to keep an eye on S&P 500 in US. Breakout above 2750 odd level in S&P 500 will begin the longer term primary uptrend or the bull market. So that was our view for next week. You have to take proper risk management and always trade with stop loss. So with this, we come to conclusion of this week session. Let's meet next week. Thank you and goodbye.